Welcome to the Startup to Exit podcast, where we will bring you world-class entrepreneurs and VCs to share their hard-earned success stories and secrets. This podcast has been brought to you by TIE Seattle. TIE is a global nonprofit that focuses on fostering entrepreneurship. TIE Seattle offers a range of programs, including the Go Vertical Startup Creation Weekend, TIE Entrepreneur Institute, and the TIE Seattle Angel Network. We encourage you to become a TIE member so you can gain access to these great programs. To become a member, please visit www.seattle.tie.org.
Hello, everybody. My name is Gowri Shankar. I'm on the board of TIE Seattle, and TIE Seattle brings this podcast from startup to exit. I'm very excited about today's guest in our series of investment outlook. And but before we go to our guest, I want to first introduce my co-host, Shirish Nadkarni, a serial entrepreneur turned serial author. His second book, I can't even get through the first book to write one, and now he's written two of them. His second book, Winner Takes All, is out and is available where books are sold. With that, it is a great honor that we have our guest today, and I'll let Shirish introduce him. Shirish, over to you.
Thank you, Gowri. Welcome, Tim. Very pleased to welcome Tim Porter, who's the managing director at Madrona Ventures, one of the premier and long-standing VC firms out of Seattle. They also have a presence in the Bay Area. Tim joined Madrona in 2006 and invested in B2B software companies in the Pacific Northwest. So welcome, Tim.
Thanks so much for having me. Great to be with you both.
Great. So I'm sure a lot of our listeners are familiar with Madrona Ventures, but for those who are not necessarily familiar, can you tell us a little bit more about your firm and your investment thesis?
Yeah, absolutely. So Madrona Venture Group has been around since 1995, and we invest in early stage technology companies, predominantly in the Pacific Northwest. We're currently investing out of two $700 million aggregate funds, so $700 million in aggregate. About 60% to 2/3 are pre-seed to Series A, and about a third are what we call acceleration stage, which is sort of think Series B or C. And for those later stage companies, we'll look at companies across the country. For the early stage, about 80% is in the Pacific Northwest. And so I work with about 14 companies right now. 2 are in Portland, 1 is in California, and the rest are in Seattle and Bellevue. And we've invested a lot in AI and ML, but we invest across the software stack, applications and infrastructure, and we also invest in consumer software. So happy to get into all of those things in more depth, but that's a little bit about Madrona and the stages and themes that we invest in.
Great, thank you. So, as you know, 2022 was a banner year for investing and startups. I'm wondering what was 2023 like from an investment perspective compared to 2022, and what was the pace of your investments in 2023?
Yeah, absolutely. And I got to say, I could have said it up front, it's so much fun to be on with both of you. And I've been at Madrona now since 2006, so 17 years, seeing a lot of up cycles and down cycles. But the two of you were two of the very first people I met in the startup ecosystem in Seattle. Shirish, you won't even remember this, but I was in my summer of business school in 2002. I was asking Greg Gottesman, who was at Madrona at the time, about any companies I should try to talk to, and he introduced me to you when you were running Team On Systems that you successfully sold to RIM. And then when I was at Madrona in 2006-07, one of the first companies I got to work with our founder, Tom Alberg, was SinglePoint that Gowri was running. So I'd like to thank you both for all the different things you've done for the ecosystem. I've learned a lot from both of you. Gowri, we went through a lot of things together. And so now as we're reflecting back on the current cycle and 22 versus 23, it's just fun to think about that history and say thanks to you both.
Great.
So 23, it's interesting. I'd say for 2023, the overall pace for early stage was pretty consistent with where it's been for us in recent years. We continuing to invest. We're investing at a pretty rapid or at least consistent pace. There was a big flavor around AI and ML companies. So probably half to 2/3 of the new investments that we made in the last year, were either in AI or in applied AI. And there was definitely an early stage focus. So I think that is also representative of the broader VC market. Early stage AI was hot and everything else kind of was not. And so, that's the pithy, summary of it. The growth stage deals, as has been well documented, in both 22 and 23 were very, very slow. And so I mentioned at the beginning, we have an early stage fund, an acceleration stage fund. Our early stage fund is basically, we raised it and started investing in September of 22. So we're about 15 months in. And that is basically on pace in terms of what would be a typical historic. It's our fund 9, so historical investment pace, sort of 12, 15 new investments a year. And our acceleration fund is a little bit slower than would have been. And I think we've made an investment. I think we'll have 2, but that's a little bit slower than would be typical. And I think that's representative of the broader market, which happy to dive into the dynamics around that more as well.
Great. So the other thing was in 2022, valuations were sky high. A lot of companies even got 50 to 75 times revenue, which is crazy to think about. How were valuations impacted in 2023?
Yeah, valuations rationalized and came down to some degree. Valuations actually peaked in the public market peaked on December 15th, 2021. And so 22, you started to see, decline, particularly in these late stage, investments that really slowed down. Those really high multiple, high dollar amount, high valuation, slowed considerably through 2022. And you continue to see that in 23, as I just was saying, almost very, very few sort of late stage deals happened. On the early stage, I would say in 2023, you saw a return to what I would call more a normal level and pace of diligence. There was less of the, hey, we just met, this is hot, the next day send a term sheet. I think valuations for things in hot areas like ML and AI, I wouldn't say they were still robust in many cases, but I'd say the overall it came down to more traditional levels, although I certainly wouldn't say low. So we saw them dip, but certain sectors continue to be hot.
Great. Over to you, Gowri.
Oh, thanks. Tim, let's dive a little deeper into your AI investments, right? So, of the investments you made, what were the broad thesis as a firm did you guys have making that investments in 2023?
Yeah. So we think about the Gen AI or applied AI almost as a stack. I mean, it's when we're evaluating individual companies, of course, it's about what's the customer pain point, what's the customer pull, what's the market opportunity. When we segment this, we sometimes think about it as more of a technology stack and how do you address the customer problems across that stack. So at the top of the stack, what we call intelligent applications. And this has been the biggest area of investment. I think it'll continue to be the biggest area of investment. And these could be areas in vertical industries. It could be reinventing line of business applications, places where you're using machine learning and AI to create new and differentiated user experiences, using your own data and third-party data to create new insights. And so that's been the biggest theme. We've done this conference last few years called the Intelligent Applications Summit, and we had a huge group of interesting companies and people brought together to talk about that. In the layer just below, we'd call AI platform services. So these are essentially tools in middleware that help people create these applications, orchestrate the applications, include things like security, etc. Another big area that infuses all of these intelligent applications and ML models is data. So the modern data stack and different ways of doing data management continues to be a big theme, and would be sort of the next layer in the stack. And then the place we haven't made any direct investments in sort of the models themselves. So obviously OpenAI ushered in this current age of Gen AI and large language models, et cetera. We haven't invested directly into model companies that were just providing a horizontal model service. But what we really believe in is that the proliferation of open source models, smaller models, fine-tuned, specialized models for companies' own data, et cetera, we'll continue to see lots and lots of innovation there. And at the bottom of the stack around physical infrastructure, GPU companies, GPU clouds, they've received a lot of funding. There's this chip shortage, et cetera. We haven't played in that area. We haven't made any semiconductor investments. It's a little bit out of our expertise and sweet spot. So I'll just, as an example, the companies that I invested in personally in the couple of deals that I led in the last year or so, one was a company called Runway ML. This is a company that is video and image generation from text. They actually have built some of their own models. They were part of the original group that created Stable Diffusion, but it's really an integrated application, that creators can go in and prototype and create movie scenes, create commercials, create sales videos, all the reasons you'd want to create a video and create very powerful video creation and editing tools in the hands of an individual user. And then another company is called Number Station, and think of them as next generation BI and analytics, where you can chat your own data. And this is a team out of the Stanford AI Lab, and they use open source LLMs that they will fine tune and train on your company's own data, so all the privacy and control of your own data, but then allow really flexible natural language based querying and data exploration to go directly to insights from your data. So sorry for the long-winded answer, but that's a bit of a flavor of the type of things that we're doing in general and the ones that I've specifically been working on.
Great. So thanks for breaking down the stack so nicely, Tim. So when you take at the bottom the GPU companies where you have not yet made any investments, and then the LLM companies, right? So where you are focusing, seems like there's two theses emerging. One is around modeling, and the other is around intelligent applications. Then there's this GPU hungry and maybe the GPU light footprint. Are there theses that of the pitches that you've seen, are the theses that you are seeing or you have formed and say this is our outlook and focus for 2024 when you look at your stack and what the market's dictating or would buy?
Yeah, and venture capital and Madrona's strategy specifically is all about trying to have a prepared mind and think about some of these themes and understanding or trying to think about where the puck is going to go, but then also trying to find the best entrepreneurs, and especially for us, find the best entrepreneurs in the Pacific Northwest, and especially at the early stage, we want to find founders that just impress the heck out of us and how they understand a customer and understand a market. And so everything we do doesn't have to be neatly within these investment themes that we spend a lot of time thinking about. That being said, we think the themes are pretty important, and a lot of times investments happen where themes and founders come together. But I just want to make that point that we're not purely just trying to sit here and think that we can predict everything. It's all about founders, and the founders hustle and grit to go solve customer problems. So with that caveat, the answer is still yes. I'd say, or I would frame it slightly differently, that these intelligent applications, as you said, biggest theme. The other piece I would call kind of tools and platform services, right, versus modeling companies, and it helps you with some of the models and using them. So that we use slightly different terms there. I would say that on the intelligent app side, this one just has the broadest surface area, right? And most often we're going to be looking for founders who have an insight into a market and a customer affinity, et cetera. And so we think vertical applications, whether it's AI tools for e-commerce, AI tools for industries from financial services to insurance to construction to you name it, things that we haven't thought of. There's going to be lots of opportunities. We'll love to back those kind of founders. We have thought quite a bit about line of business applications, legacy applications where Gen AI or new data sets or using old data sets in novel ways might create, opportunities. So we sort of have, I won't bore you with going through it, we sort of systematically think through the different parts of the business, from office to the CFO to, we've already made investments in the sales stack. We've made investments in the legal stack and, in-house legal. So continuing to think through those. We continue to think productivity apps, for like the information worker, that there's, from personal agents that help you do various things, in the workplace is going to be a big ongoing area. That's always been an area of investment for us, from companies like, Smartsheet, 12 years ago, to Coda more recently, to what's going to be the new thing, in productivity in the future of work. So we think about that area a lot. And then we think about automation broadly. We were investors in UiPath, and Soma spent a lot of time with UiPath, and Ted Cummert is back at Madrona, having been there. And what are all the different places where the paradigm of something like RPA, what's the next gen of that, and how can we bring more, really strong ROI based automation into different businesses. And it's often about human augmentation, not human replacement. So one of the companies I work with is called Outbound AI, and they help revenue cycle workers in healthcare more effectively manage and navigate claims, explanations of benefits, eligibility of benefits and verification, et cetera. This is really manual phone-based work in most. So how can AI help those workers get a lot more efficient and do their job more effectively? So those are some areas in intelligent apps. I could keep rolling on the platform services and tool side, but I don't want to talk past the question.
Great. No, that gives a very good overview of what you're looking at in 2024 from our listener standpoint. But I want to point out one thing. You touched upon and repeated your commitment as a firm, and you personally, to entrepreneurs, good entrepreneurs. For as long as I've known you, and Shirish has also known you and the firm, that's been the core of what Madrona brings. Capital is great, and there's capital available in many places, but the core of what you always insisted on as a firm, and you as a person, was how do we help the entrepreneurs? Can we make them successful? And that gave the entrepreneurs this idea that it's collaborative rather than corrosive. So I think it probably goes back to your first investment in Amazon, but that could be the start. But the fact that after years you kept that culture is amazing testament to you and the rest of the leadership. So I want to bring that out to our audience.
I appreciate that, Gowri. It's definitely the most fun part of the job, is trying to do whatever we can to make founders successful. And there's perfect alignment. If the founders are successful, we're successful. But the really gratifying part is seeing founders build great companies and bring success to themselves and their teams, have a positive impact on the world through doing that. And we've got the benefit of working with a bunch of different companies over a bunch of years, and founders, when you're a founder, your head's down on your company. And so if we can bring perspective, and the thing is that we definitely don't fool ourselves. I don't always have the answer, but hopefully I know somebody who could help us find the right answer together. Right. And so that's the important thing.
Yeah. So looking at 2024, it's a election year. The economy is doing what it's doing. With your focus on AI, regulation is around the corner in some fashion, right? And then there's drama all over open AI. And so given that, what's your outlook for the macro economic thesis around 2024 and how it affects what you guys do?
Yeah, great. Who knows, right? I'd say in general, when we invest for the long term, and we assume it's going to be 8 or 10 years cycle on an investment, and a fund is 10 or 12 or 14 years, and so we try to keep the bar the same. We try not to let kind of macroeconomic crystal ball gazing impact our investment decisions year in year, and we want to back the kind of founders and trends and markets that are going to be durable, and that we figure over the course of that investment, we're going to have some up cycles, we're going to have some down cycles, and yes, being smart about how you as a company time some of those things and how much you spend and how you push on the gas versus the brake, et cetera, are important. But we try not to get too prescriptive around thinking we can predict the future. That being said, I mean, I think some stuff that we're going to see in 2024, I think we actually will see more later stage rounds. I think they're going to start to happen. I think you'll probably see quite a few down rounds, within that. It won't all be, there'll be these companies that raised a lot of money in 2021 and have been working feverishly to hit their milestones, get efficient, grow into their valuations. Some or many have, and now that it's time to raise more money, I think they'll be able to do so. And then there'll be, some other ones who haven't, and those will be harder situations. But either way, I think a little bit 2024 is a year where those companies are going to have to, come back to market. And so there'll be some really positive pieces of that with more growth financings. But I think there'll be some other companies that don't make it, because of that. So more positive, but some negative. And we've seen some of that in the last few months already, right? Some companies like hitting the end of the road. I think we'll see more M&A. And I think some of that will be what I call good M&A, where it's a win-win outcome for the founders, for investors, and for the company that's acquiring them because they have a strong thesis for how they can go take it to the next level. There hasn't been a lot of that. There's very little over the last few years, but I think that you'll see, even if the really big acquirers are dealing with antitrust discussions and things like that, if there's maybe a little bit of muting on those, I think there's a whole crop of companies who are at scale who, we'll start to see some more positive M&A, including in private equity. And, before we turn the record button on here, we were talking about Rover, .com here locally, and just are in the process of the take private by Blackstone. But I think that's an example of good M&A. So I think we'll see some more of that, finally. I think the IPO markets are open, but it's a really high bar. So I think we'll see a few more IPOs, because there's some really good companies that have been stacked up waiting to go out, but I don't expect exuberance. In the customer side of things, I feel like we've hopefully are past the bottom, of the really big riff, radical cost cutting, cost rationalization. I don't think it's going to turn to exuberance where all of a sudden spend. But I think especially in strategic areas like MLAI, like cybersecurity, like data, I think you're seeing incrementally some hiring and some spending. And so I think, I'm not saying selling is going to get easy. The selling market has been hard the last couple of years for selling into both businesses and consumers, but I think we'll see some incremental thawing there as well.
Excellent. So, quick rapid fire. Your companies that you work with, what would your advice be in go to market in the new model of AI that's emerging? Is there changes? How are you advising them?
Yeah, I think that every company, every function, from venture capital firms to Fortune 500s, are asking themselves, how can we use Gen AI to become more productive, across everything that we do? I think that's going to be an ongoing journey. You asked on the go-to-market side. I mean, if you haven't embraced AI tools, to help with, content generation, marketing automation, content marketing with embedded in those first two pieces, you definitely need to. There's low-hanging fruit there. I think a lot of companies have embraced those. Some of the sales automation tools, I've been working with HighSpot for a long time. They just rolled out a whole suite of Gen AI sales enablement tools, from interacting and chatting your own sales content to how you rapidly personalize and get the right information to the right customer at the prospect at the right time. So I think you'll see a lot more broad-based adoption. I think another theme in this vein, Gowri, for 24 is that there was a lot in 23 of oh my God, ChatGPT, how do I use this? Experimentation, quick wins. I think you'll start to see deeper workflow integrations and really like using an enterprise production, in 24, that it's not just like, hey, wow, I can get efficiency out of ChatGPT and what else can I build, in weekend hackathons, but it's like, all right, business process that we are seeing deeper integrations. I think you'll see that in production more in 24.
So what's the one prediction you'll make for 2024? And we'll come back in 2025 to validate your prediction. So what's the one prediction you would make?
That VC investment dollars and number of deals and M&A dollars are all up in 24 versus 23.
Great prediction. We think that it swings back to normalcy, or at least to what it is. Thank you very much, Tim, for making the time. Appreciate it. It's been a pleasure having you on our podcast. Thank you very much.
Thank you,
I
Tim.
really appreciate it. Fun to hang out with you guys.
Take care.
Yes.
Thank you for listening to our podcast from Startup to Exit, brought to you by TIE Seattle. Assisting in production today are Eesha, Jain, and Minee Verma. Please subscribe to our podcast and rate our podcast wherever you listen to them. Hope you enjoyed it.